Hello and good morning. You're watching Markets Today. I'm Sakshi Batra, and this is where we discuss everything about the stock market's opening action, how the markets are trading in the early trade, and what kind of trends can you pick up and the impact on your investments today. Remember, the last week we've seen very high volatility. The market slipped 4% over the entire week, and yet another week has started on a down note as well. Talk about the Sensex and the Nifty. Both have opened with a sharp gap down in line with the global markets and the fall in the Asian markets as well. Over a percent down for the Sensex and the Nifty. The Sensex has now lost about 800 odd points. The Nifty has slipped below the 16,200 mark as well. So it's further slipped down from the opening levels as well. It opened higher, it opened on a lower note at 16,240 and thereabouts, but now it is trading 1.5% lower at 16,169. All the sectors of the Nifty are trading down in trade today. Talk about the sharp fall coming in for the mid and the small caps as well, which are underperforming the benchmarks 2.2 to 2.3% down for the mid and the small cap index today. All the sectors of the Nifty, look at the metals, they are down 2.6% in trade. Pharma 1% down, IT 1% down, Nifty Bank almost 2% down, Realty 1.2% down, private banks almost 2% down, PSU banks down 2.3%. So it's the banks that are feeling the deeper pinch right now, feeling the most hurt right now. FMCG down 0.9%, financial services down 1.5%, autos down 1.8%. You name it, everything is down deep into the red. Of the Nifty 50 stocks, 44 stocks are seen declining, only 6 are advancing at this point in time. Let's see which are the ones that are still showing some bright spots. UPL up 0.4%, Infosys 0.2%, Power Grid, Cipla, SBI Life, all of them up 0.1 to 0.2% in trade. Very slight gains coming in there. But the sharp fall on the Nifty in terms of stocks is Tech Mahindra down 4.5%, the top loser right now. IndusInd Bank down 3.3%. Tata Motors down 3%. Reliance Industries, after its earnings, remember after Friday's market close, Reliance Industries reported its numbers, record numbers being posted on all operating fronts, be it the revenues, profits, and the consolidated EBITDA levels as well. For the first time, we've also seen some record breaking numbers from Reliance Industries stable, making it the first Indian company to cross $100 billion in revenue consolidated basis. So those kind of numbers could not really fuel some enthusiasm in an overall downward market for Reliance Industries. The stock is down 2.8%, trading at 25.46. Remember, Avinash Gorakshaka, who spoke with us extensively on decoding of Reliance Industries results on Friday evening, did mention that over a course of time, for the long-term investors, Reliance Industries is a stock that one can definitely look at. However, you speak to your financial advisor before taking that call. Tata Steel, again another stock that's down 2.6% in trade. What's also lower apart from the equities is the rupee today. It's at a record low level of 77.40 against the strengthening dollar. The dollar has been strengthening over the past few many days and months now. And in fact, amidst this uncertainty, it's the only asset class that has outperformed all asset classes, not just the currencies, against the emerging markets or the developed markets, but it's definitely against all asset classes as well. The strength in the dollar, and look at that playing out for the rupee. It's at record low of 77.4. What we also are given to understand, the RBI is constantly supporting the rupee from falling steeply at this point in time, but because of that, the forex reserves of India are now slowly dipping as well. How much more room does the RBI have to protect the strength in the rupee? That's a big question that we will be asking all our experts in today's trading session as well. Let's go on to understanding some more details. Okay, so now the rupee is at 77.42. It's at a record low right there. Let's also look at some of the other news flows that will be important to track today. Glenmark Pharma, that stock will be in focus. It has got a US FDA nod for some of its drugs, but in an overall downward market, again, you can see some kind of a jittery move on the stock as well. HDFC Bank has again, risen the MCLR rates right there. So that's another stock. So the banking action continues because that will be important to watch out for. Reliance Industries, like I told you, will be an important stock to watch, even though it's down by 2.5% right now. There are a lot of brokerage houses that have come out with a report on Reliance Industries. Let's take them one by one. Morgan Stanley has mentioned that the higher refining margin and lower telecom subscriber churn will be key triggers going forward. JP Morgan believes O2C segment should report strong EBITDA in the first half of FY23. Credit Suisse says key catalysts are update on the listing of Geo and retail in the upcoming AGM. Jeffries has said that what could act as a safe haven in today's context, despite the elevated capex, is Reliance Industries. CLSA has said that it's one of the best earnings growth stories among India's large caps so far. So positive commentary coming in there. Goldman Sachs also sees acceleration in earnings, expects a 21% Q on Q growth for Q1 of FY23 too. So it's the earnings visibility that's also giving some hopes right there. I was telling you about HDFC MCLR hike by 25 basis points across all loan tenures. That's another stock that you need to focus on. All the banking stocks right after the RBI rate hike are constantly revising the MCLR rates as well. Now, the FIIs are constantly selling off, putting further pressure into Indian markets. They have been net sellers for most part of this 2022. But for now, if you see on May 6, when we had seen sharp fall on the markets, 5,517 crores worth of shares sold by the FIIs. DIIs net bought 3,000 odd crore rupees worth of shares, but still the pressure was on the downside by the FIIs for sure. So that's another, important factor that you need to watch out for. That the FIIs have been on a constant selling spree. The DIIs have been protecting, but with the rising interest rate scenario, with FDs becoming more attractive, will the retail investors now get impatient, pull up the money from equities, put it in the debt and safer, asset classes as well? If that happens, then what is the kind of impact that you can see on equities? That's an important factor. So discuss all of these factors with your financial advisor before you look at and rejig your portfolios now in the changing macro setup that we are seeing. Experts, what do they say of the markets? Prashant Tapsi, he said that technically speaking, Nifty's intra-week support is seen at 15,900. So further fall is not ruled out. Below the same, a waterfall of selling up to 15,200 could also be seen. So experts are now talking sharply of almost 1,000 points lower visibility as well if the markets continue to fall. Keep an eye out on that and then take a decision on how you need to move on your markets, of course, on your positions in the markets as well. Of course, there'll be another important factor, and that's the LIC IPO, the last day of subscription, 1.8 times subscription already done. Strong, moves across policyholders quota, retail quota, employees quota as well. Today will be the last day. Let's see if there are more flows that come in. 5 days is what the LIC IPO was open to get all the, investors. Categories filled up as well. So keep an eye out on that importantly too. With that, I wrap up, but we'll keep giving you all the updates from the stock market. So do stay tuned on to Business Today.